Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm with KKM Financial. We're looking at the VIX cash dropping quite a bit today, below the 20 handle currently. We're looking at 19.5 on the VIX cash level right now. Intraday low currently of 19.19. We'll see if that holds, but yesterday's intraday high of 24.74 is quite a significant change day over day, as we're seeing 5 points coming off the VIX cash level from the intraday high yesterday. And looking at realized volatility week over week, an interesting dynamic. 10-day and 30-day realized volatility really hasn't changed much week over week, even though the market has realized some downside pressure. Realized volatility hasn't shifted too much, but certainly implied volatility has, as we look at the money straddle and the SPX going from a 10.8% reading to a 13.8% reading. So a 3 vol point increase in implied volatility levels on the money straddle in the SPX. Looking at the VIX futures, we're seeing the futures roll market widen by 40 cents today, as the front month futures down more so than the second month future. $2 a premium in the front month future. So you're looking at the VIX cash right around the 19.5 level, and that front month future right around 21.5. And steepening of the curve today, as we're seeing those back month futures holding on to premium levels and the front month futures declining in premium levels as the VIX cash declines as well. Looking at VVIX, measure implied volatility in the VIX options, that's 123. So we're seeing that drop quite a bit, down about 7.5 points today, as again, some of the valuation, some of the premium, I should say, is coming out of those VIX calls as the market comes under some pressure and those VIX futures slide lower. Looking at price action today, activity, I should say, certainly pretty much in September. And you look at the September strikes between the 30 and 37.5 call strikes. That's where the majority of the activity is so far today in the options on the VIX. Next week, let's see what we got going on here. We certainly have PMI data. We have some data, so PMI data and personal income and spending data. I think those will be possible volatility drivers. Jackson Hole is going to be the focus next week, as we do have Fed officials speaking throughout the later part of next week at the Jackson Hole Summit. COVID-19 storyline continues to be a theme here, so that's another challenging environment for the market, and I think that's why we're seeing vol increasing this week, as it has more of an impact. And certainly China is another area with regulations continuing to roll out, and that's creating some instability in the foreign markets, and therefore it's spilling over into the U.S.